because when you get to the six-figure level, I think it sends the message to people that Bitcoin is here to stay. I think there's been multiple stages of Bitcoin, right? There were the early years when it wasn't clear what it was or whether it would survive. Then there were the block size war years when there was the big fight over the identity of Bitcoin and what was Bitcoin and what wasn't Bitcoin. And then I think from 2020 to 2024, I would say those were the crazy years, but there was the big question was, is Bitcoin an institutional grade asset? Will it be embraced by governments, by corporations, by institutions, by traditional capital markets? And there was back and forth, and there was a lot of skepticism. And, some people said it's too good to be true. Some people said it's so good they'll ban it. Some people said, well, there'll be a little bit, but it won't be much. And then there's a big fight over, is it a currency or is it capital? And I think that since November 5th, right, we've seen kind of a surge from to 2024. And I think in 2024, we started with some cautious optimism, Bitcoin grinding up, a lot of questions about the rest of the digital assets economy, but Bitcoin, recovering from the bottom on its own without help from anybody. And then we got the approval of the spot Bitcoin ETFs. And then we had the halving. And the consequences of the halving were a number of things. One, there was a big secular rotation of capital from a bunch of Bitcoin miners to MicroStrategy. The options market in Bitcoin moved from the miners to MicroStrategy. So all of a sudden, MicroStrategy emerged as a leading volatility liquidity trade in the crypto ecosystem. And we became aware of that. And I think the second thing is 450 Bitcoin a day, which is $45 million a day of selling, got taken out of the market. And so the supply tightened, and the natural supply was always less than the cost of capital. MicroStrategy, we discovered a crypto reactor that could be fueled by Bitcoin, and we put a crypto reactor in the middle of our company. It's kind of like turning on a nuclear reactor or putting an internal combustion engine in a horseless carriage. And that's what we learned in 2024. And we came in October 30th and we said, this is what we're going to do. And that was very well received by the capital markets. That was a big success.
Yeah.
And the day after we did that, our stock outperformed every Magnificent Seven company, and our stock outperformed every Bitcoin company and outperformed Bitcoin. And that was a very important signal to the market, which is the capital market's going to line up behind fighters. I mean, BlackRock has had record flows.
Incredible, yeah.
Right? And MicroStrategy has record flows. Our option interest surged to like $100 billion.
Right.
And our liquidity surged to the point where we're the number 3 stock after NVIDIA and after Tesla. And so the capital markets discovered and supported Bitcoin, the political system did, and now we're starting to see the dominoes fall. I mean, the favorable comments by Jerome Powell, not a surprise.
Right. He's a smart guy.
And everybody else, you can see at this point the consensus is building. This is a global monetary asset. It is worthy of attention. If it's not going to zero, it's going to 1 million.
Yep.
And that's where we find ourselves today.
Can I ask you about the 21-21 plan, which was
Sure.
absolutely, you're absolutely right, earth-shaking in capital markets, I think, and then proving the demand. In fact, so much demand that I think the latest convert that you guys did had a 0% interest rate, right?
Zero coupon, up 55 points, and we started looking to raise $1.75 billion, which is twice as big as our previous largest convert. We started twice as big, being 60 miles an hour, and you got a flywheel spinning 60 RPM on the train, and that's your energy. Okay, so that's what's coming out of the crypto economy and the macro economy. there's a drive shaft, and that's being driven into the spot ETFs. And if you wrap it with IBIT or FBTC, you can buy 60/60, right, in the form of security, or you can buy 60/60 in the form of a commodity. MicroStrategy, as an operating company, what we're doing is we're stepping that up and we're stepping that down, right? So some people want what they want is 25% of the return of Bitcoin. And you would think, well, you're crazy. Well, they'd rather have 15 ARR, 5 vol, no risk, or be 10x over collateralized, right? Just give me 15%, but tell me there's a very, very small chance I don't strip the risk. We can embed something, the senior 10% tranche of the capital structure, and we spit out one type of returns. But by the way, some people hate volatility, right? The mainstream normies.
Yeah, they do.
They hate it.
Yeah.
But if you go to Susquehanna and you said, we're going to strip the volatility from MicroStrategy, we wouldn't have $100 billion, $95 billion open interest. Do you know what happens when you strip the volatility from a company our size? I know, because I have another company that I started, and the other company is twice as big as MicroStrategy in revenue and twice as big in EBITDA, and it's well run, and it's just a great company. The open interest is 5 million type of view. There are other people, they don't want to take the risk for an hour. Like literally the afternoon they're buying the bond. When the stock's moving around, they're buying 50 million, shorting 40 million minute by minute. They don't even want to take an afternoon of risk.
Right.
But that's okay. So I think that it's a long-winded answer to your question, but we're just going to provide securities to every pool of capital. If what you want is that instrument, if we think it's good for our common stock shareholders, we'll sell it. Ultimately, there's a lot of instruments we could create that are kind of dilutive to us, so we're not going to. But, there's the dude that wants investment grade fixed income, guaranteed coupon, 10x over collateralized with a bit of boost past that. We're going to give them their thing. There's someone else that wants 20% coupon yield, outperform private credit, and they want lots of cash. We'll give them their thing. There's somebody else that wants Bitcoin upside, but they want principal protection and less volatility, and we'll give them their thing.
Right.
And it's insane.
That is insane.
200%, right? You sell that same call on SPY, 15%. Right? And then you go and try to sell that call on BND, on the bond or on VNQ, the real estate, or on gold. Good luck.
Right.
There's no there's no vol, there's no market. Nobody wants to even make a market in that, right? And you basically hold the dollar. Okay, well, you get 30-day SOFR. You get 480 basis points.
Right.
So us levering our permanent capital gets us to more vol. And then the fact that we're an operating company means I can sell equity at a premium, but I don't have to. I can do a convertible 50% Bitcoin, no hedges on, but yeah, because you're robbing the investor of their opportunity when you put your hedges on. There's a concept in system dynamics and political economists, the shifting of the burden to the intervener.
Yeah.
Okay? It's like, because you chose to do it, I don't have to. Okay, so when I give you a 150% Bitcoin company and I don't hedge it and I tell you I'm not going to hedge it, you don't believe me for a while. You're going to rug pull me. You're going to take profits. You're going to, right? It takes a long time for people to trust you, right? But your best chance to get people to trust you is if you're laser-like focused and committed and transparent, and you never break faith with them. They're like, by the way, this is tough love. When Bitcoin trades down 80% and you wanted me to bail out, I didn't. I'm sorry. All those bondholders, they came to me when the bonds were trading 30 cents and 40 cents and they wanted me to issue equity $2,500 down, we lose $1 billion.
Yeah.
But now I can go, I go buy that.
Yeah. And everyone knows exactly why.
Yeah. It's like the world's got infinite capital. They want the security. So the real key here, if you're running a public company, is pick a strategy, solve a problem for the market, be consistent, reliable, trustworthy. And, if the market trades down 90%, the most lucrative trade in the world was like to buy MicroStrategy stock at the bottom of the crypto winter, right?
Yeah, absolutely.
Right. I mean, I think our stock got down to $13 a share. Not that long ago, $13 a share.
You're up over 400 right now.
Yeah. And so for us to unwind the trade would have unwound, I think literally it's a $98 billion mistake.
Yeah.
To basically flinch.
Yeah.
At the bottom of the market. And so you're converting a capital gain. You're forcibly converting a capital gain into a taxable distribution for an equity investor. If they wanted a taxable distribution, they should be a fixed income investor. If you're going to do that, my view is issue a preferred stock or issue a bond and pay it to someone who's a willing recipient. I think actually jamming a dividend on an equity investor, it converts your company from a growth company and in tax-efficient equity, it converts you into a hybrid where you're kind of half fixed income, half equity. You're basically telling the world you're not a growth company anymore. You're not sure how to grow. And you really would like to find a lot of risk-averse investors that don't even believe in growth.
Right.
That are happy to pay tax, excessive taxes. So that strikes me as you've lost conventional strategy for every software company. And I don't know how many companies go down this path. That can, Apple service revenue. We're just going to have Apple Prime and you're going to buy, everything.
You're going to
and
put it all on the one device. You got to carry it everywhere.
What's your monthly fee on that? You're going to cancel,
Right.
Did you buy the gaming thing that you don't use?
You get the iCloud data storage.
Yeah, okay. You just forgot to pay your bill, and of course, all your memories disappear.
Yeah, exactly.
And your friends and your photos.
Yeah, it's a hostage situation.
Okay, so that's a conventional strategy. I view that as a road to serfdom for the company, because this is the fiat strategy, right? You're going down the strategy of I have no assets, I have no capital, therefore I only live on expectations. Therefore, I make my executives work harder, my employees work harder, my customers